Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that this guy follows. I'll interject my financial opinions as we go. And if you need help with anything, check out finding-value.com, where I dive deeper into these sectors, topics, and individual companies. I am going to go over a little bit of training uh, this next weekend, touching on some of the returns and why I choose such large asymmetric opportunities. And I've got a little bit of math behind it to show you guys the potential returns of last bull market, translating it to strategies that we can use and deploy to this bull market. And it deals with portfolio allocation and why I'm choosing certain companies versus other companies. So, and we do have a discount coupon code that is active, Mayday, MAYDAY, if you're interested in joining. So let's dive in here. Let's take a look and see what is going on in the markets. We start with the DXY. I know we've got a little bit of talk out there of lowering of interest rates for the ECB and potentially some other countries. I think Canada also. And we've got a little bit lower dollar today, basically flat. This thing isn't tanking. It's just kind of working its way lower since about April, mid-April forward. Just been kind of slowly creeping lower. Does this mean that we're going to cut rates? Is this a flag pattern that we're going to eventually work our way on up? I don't know. I don't know if they're going to have a weaker monetary policy than the United States. I don't know what their necessary plans are, but this doesn't look like it's ready to collapse yet. At least when looking at the pattern, it doesn't mean it can't collapse. I'm just saying it doesn't look like it is collapsing. Whenever you have a lead in with large buying pressure and you get this small kind of just sideways action, that generally wants to go higher. So we'll see. I'll hold my breath there and say we'll see. We're above a lot of support. You've got the support of the trend line going across and the horizontal trend line. So even if there is some selling pressure, you do have a lot of support underneath us. In the 102 region down here, it's pretty strong. 2-year yields, we are slightly higher, but we've had a pretty big sell-off here. I'd like to see what this support level does and what the bounce looks like here. A lot of the times when you come in hot into a support level, it'll bounce, give a weak bounce, and then roll back over. Very well could be the case. If that is the case, and we do start to dive lower, that could mean that we are going to lower interest rates, the Federal Reserve. And that could also mean, generally speaking, if we get a dive bomb in yields, which we'll see, that generally indicates a slowdown in the market. We did enter this with a pretty big selling pressure move, lots of small green candlesticks coming up like it was struggling back to the top. And then we'll see if this actually blows out. Kind of looks like a shoulder, head, shoulder. I get it. I get it. So that's what we're looking for. We're looking for what this follow through looks like here. If it blows to the downside, we could see a slowdown in the market, and we very well could come back to rates that are much lower, as in down here. How do I know that? I don't know that, but if I were to make a guess of what the projected move is, it'd be something on the lines of this going down to 3.25% or something like that. Very well could be the case, and we could get a slowdown. I've talked about not really knowing in the short term if we're going to get a pullback or not. And I still don't know that with any accuracy here. But if we do pull down, that would be the slowdown that I'm describing. It's interest rates moving up, which is this interest rate. It comes and flows through the system. We need to reconfigure the economy for higher rates, and sometimes we get a slowdown when that economy reconfigures. It's not caused by the real estate market. It is driven and caused by inflation, by increasing rates, and businesses that were surviving on a low interest rate environment not being able to survive at higher interest rates up here. So you kind of have to flush that crap out of the system, and it does, I think, bring rates down a little bit if we go through that type of flush out. But there is a problem there because if you lower rates, I believe that we've got a bunch of home buyers that are out there wanting and willing to buy homes. And I think the housing market would go up substantially if they were to lower rates down to the level that I just described. So we'll see what happens. And I'm going to stay long in this market as long as there's that imbalance in the housing market. 10-year yield also falling, and we are playing with this support level. Are we going to pull on back? That is the big question. To me, by looking at this chart, it does look like it wants to. Does look like it wants to pull back, and we very well could see a slowdown in the market. We are also seeing that with the confirmation of gold and silver moving to the upside as well. 30-year yield also momentum down into that support region. We'll see if support holds, and that does look like to me that we could potentially drop in yields. And big longer term view, and I didn't put a trend line on this one, but there's your trend line just to throw it on up there. But we could pull back quite a bit into this region somewhere in the threes, somewhere in the 30-year yield. TYX TNX ratio holding pretty steady. We haven't really seen a huge move in either direction. It's been range bound, is what we'll call it, in this general area here. So the curve's been inverted, it stayed inverted, and when it uninverts, gold and silver generally do very well. Bond prices, slightly lower. We're up against resistance, and we'll see if that momentum in bond prices continues on up. That would be lowering of yields, increasing of bond prices. And then the 2 and 10 holding steady at an inverted, very inverted level. When this starts to dive down, when you see the 2-year yield dive, that is generally a leading indicator of what could potentially come. And that is when, if you are going to be risk off and you want to pull back and kind of be more in a prepared mode for something that could eventually occur, that is when you start to prepare, in my opinion. Gold up $16 an ounce. Is this going to move on up? We have a lot of people calling for a move lower. I'm not calling for either direction here. I'm looking at yields and watching yields. If yields dive, I would suspect that gold continues on up. If yields find support and move to the upside, I think we're going to go sideways to lower in gold in the short term. Silver ripping it up 4.3%. This is, again, guys, this is broken out of the longer term big picture view. This, I would be bullish. I would not be trying to time the short term market here. I would be bullish. I'd be riding up, and I'm in those investments to be bullish. Platinum up 1.19%. We're still trying to break out. That has not changed. Still trying to break out. And then palladium moving sideways, right on support. And really, that's kind of where we're at. We kind of came down here. We'll see if this support level holds. But I don't expect palladium to outperform platinum and silver given the market conditions. It might after we get a slowdown, but we'll have to see what that looks like and what the inflation looks like and what the housing market does. It's in a combination of all those things. XEU to gold ratio, we're seeing a large outperformance of gold and silver mining companies today, and we have broken that downtrend line. We need to remain bullish. This is coming from a very low level, and I think this is probably one of the areas in the markets that's probably the most mispriced and cheapest valuations being gold and silver mining companies. CRB index isn't updating. I'm going to skip over that. GDX up 3.5%. Again, we were on top of support. We got that support, and now we're getting a bounce here. So I think this looks good. Very strong closing. Looks good to continue higher. Very bullish for gold miners here for GDX. GDXJ also looking pretty solid, 2.8% up day today. Pretty strong closing. We're still underneath that long-term resistance line. When we break through here, guys, I mean, if you're not bullish already, you should already be bullish. I mean, gold's got momentum, silver's got momentum. I think this is just a matter of time. It's just a matter of time. I'm already in all this stuff. Been a good time to be buying down here, which we were talking about a lot of those investments on the website for some of these areas all through here. Picking it off. Some of them we've been in probably 6 months, and now they're really starting to pay off. SILJ also working its way up. There we are today. Decent candlestick. And again, I'm just going to sit in this stuff. It's the market conditions are ripe for this to go higher. If rates were to fall, it would be further reason to be looking at these sectors. Crude oil up 2%. And we still have this kind of yucky move lower, but we'll see if we can continue trucking on up for crude oil. We are sitting on top of a pattern. And this is where it gets kind of, kind of confusing here. Are we going to break out of this and rip? Are we going to get an inflationary recession? Could we get a slowdown in the market where it's very inflationary? Could they lower rates and we see house prices juice it here? I am of the belief that that is the case. So, I mean, if someone were to say, if you were to cut rates in half, the home prices go up or down, in a recession, home prices would go down with rates going down. If you're not in a, if you're in a tech bubble, like a different type of slowdown where the economy is reconfiguring itself, I think we're going to see inflation, a slowdown in certain sectors, and the housing market remain resilient and strong. So that's the way that I would think. And I also think the stock market's going to look a little bit weak, like the S&P 500, and also the NASDAQ during a move higher in home prices potentially, and maybe even oil prices moving on up. Um, but again, we haven't broken out of these setups. So that's an opinion. It hasn't been bared by the charts yet. TTF is down a little bit, but again, we're working our way up. Higher lows, higher highs. Looks good. Natural gas in America up 2%. We are starting to try to break through this resistance level and maybe potentially work our way on up, or maybe we get stuck here and move on sideways. Our boy XOP, yeah, you know me, was a little scary the past few days here, but we got a bullish engulfing today, giving us a little glimpse of hope. Doesn't mean that we're going to break through this resistance line, but we've got the momentum, and we'll see if we can get above it and start working our way up. You can see here that we were sold off in the morning a few days. This is Tuesday. We've worked our way sideways, and we're starting to work our way up. And basically, you can see the lows coming on up into that resistance line. I drew that line a long time ago, and you can see it's a valid resistance line as we've hit it multiple times here in the very short term. We're right underneath it. We could easily pop to the upside, maybe even tomorrow. So that's looking a lot better, and we're right at that neckline. Right at the neckline. I think this could be the beginning of a big move if we do get a break in oil and whatnot. OIH up 0.23%. And we're right at that resistance line, support line. So we'll see if we can hold. We'll see if we can hold. Now, if the 2-year yield drops and people get scared, this very well could pull back, just like XOP could. That is a possibility. Sprott Physical Uranium Trust, we are up a little bit today. Not a convincing candlestick. So the momentum is still to the downside, and we'll see if we can turn this around. URA also up, and we're right at that support level that I was talking about. URNM up a little bit below that support level, but you could also grab this support and move it like this because there is a bunch of contact points through there. And then URNJ up 2.85 right on support. Right on support. So we'll see if that holds. URNJ versus URNM, a little bit of outperformance for URNJ, but we are still underneath strong resistance. TAN down a little bit, right on resistance, and it is not puncturing that resistance yet. Copper The physical metal still looking a little bit weak here in the short term. We've broken the downtrend, and that downtrend is still intact, even though we were up today. Still looking a little bit weak. We've got COPX up a little bit, and I would just be holding on. I wouldn't really be doing much. Is this a flag pattern consolidation? We'll see if that is. Copper looks a little bit weak breaking through this here. It might consolidate, and that's kind of where my mind's at. Maybe we got some consolidation going on. But again, in the short term, guys, it's real hard to nail the short term. This very well could rocket higher, and copper could too in the short term. So I'm not stating that I wouldn't be holding it. I'm stating that in the short term it looks weak still, but the commodity markets can move very quickly and change direction very fast, and I don't try to time the short term. Lithium looks like it's not too bad of a candlestick today. It was down 0.39%, but it still is a decent looking candlestick. It's holding on. We've got REMX down 0.83. This looks kind of ugly, guys. We are at the bottom side of this pattern, and the pattern is angled upward, and that generally states more downside could potentially come. S&P 500 moving sideways, still looks okay. We've got some upside momentum, small little down candlestick. Same with NASDAQ, so that still looks okay to keep trucking higher in the short term. If you see the 2-year yield drop like a rock, this could turn over. Could. Russell 2000 down 0.7%. It's kind of just moving sideways there. You know, there's nothing really in any of these charts here, like the Russell and REMX, like there's nothing here convincing me I should be buying it. There's nothing. Now, if we came through a real estate crash, which is this crash here, I would be buying the crap out of it all through here. And then I'd ride it on up, and then I would have transferred it into commodities here. This is I'll put circles. That's a commodity buy point. I wouldn't be in this because the valuation and the conditions could be incorrect for a big, large move to the upside. KRE up a little bit, just moving sideways. Right, it's still at this big support zone. Emerging markets up a little bit, weaker dollar, weaker yields, right? No, weaker dollar, stronger yields, but up a teeny bit. And I think emerging markets, if we get a decline in interest rates, and if it's not a crash, if it's more of a kind of a tech deal, when the dollar falls, it might gain momentum and it might give the emerging markets a little bit of a boost. XHB down a little bit. It's been consolidating sideways here. We've got Moo. This looks really good. This is a bullish engulfing. This is going up. I think the VanEck agribusiness Moo, which is doing a retest here and has a bullish engulfing on the short term, that looks really good for a potential move up. We've got iron ore moving its way on up right at support, up about 3%, and that looks pretty good. We're at a low area down here with a lot of support underneath us, so it doesn't look bad. Nickel down a little bit, but again, guys, I'm still bullish on nickel. So even if this were to bounce around a little bit, I still think the trajectory is favoring an upside move. Aluminum down or up a little bit, and we've got a small kind of thing. I think we're going to round it out and work our way on up. The trend is up. We've got these support going across here, so I do think that we could potentially work our way on up slowly. Baltic Dry Index also higher, 2%, and I would be favoring a move higher because we've got a ton of support underneath us. Horizontal, the trend line coming up, just support in general below us. Newcastle Coal Futures, maybe we're doing a retest or something, but we've broken the downtrend line, and I'm going to remain sideways to higher. We could consolidate for longer. No problems there because we've broken out. We had a lot of downside momentum, and usually these markets consolidate for a little while. This looks almost like a palladium chart too. But we could consolidate, but I still think this is a good area to be looking for coal stocks, in my opinion. A lot of big dividend payers. BTC working its way on up. It was down today, but still looks okay. Ethereum down a little bit more. It's hanging in there. We'll see if there's any follow through tomorrow, if there is downside pressure. And then SMTI down 3%. It's still above support. It's holding on at this current time. And Nvidia was also down 1.14%, but the momentum is definitely up. This is it's almost 3 trillion market cap. It's kind of unbelievable. But that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We do have a question and answer session coming up this weekend. I think it's 7 a.m. on Saturday is the time, and I'll see you there. And we'll go over a little bit of information I put together in Excel and why I choose these large leveraged asymmetric bets and why I choose the least risky assets, some of the least risk assets, and why I do that. And I could show you the strategy and the math kind of behind it of why I do it. So that's what we've got coming up. I can also hit some of your guys with the risk on, risk off questions, which I touched on here today, and maybe even some of the key financial metrics that I do look at. It's not going to be anything too in depth with it. But yeah, that's what I've got for today, and we'll catch you later. This is Finding Value.